Well, good morning. There's been a lot happening in the share market recently. Now, many Australian investors own shares in Telstra. Of course, it's one of the most widely owned companies in Australia. And on Sunday, the government dealt with an issue it should have dealt with a long time ago and did a deal between the proposed national broadband network on one hand and Telstra on the other. Now, on Monday, Telstra's shares rallied perhaps less than what most people would have thought. They were around $3.20 on Friday, and they went as high as the mid $3.40s on Monday. So they've fallen back to around about $3.30 a share. The removal of the NBN threat is good for Telstra, there's no doubt about that, but the big issue is where is Telstra's future profit and future sales growth going to come from? And Telstra's margins in mobiles and in internet are still under attack by some pretty vigorous competitors. So I'm still a bit sus on Telstra. At the moment, the dividend is being maintained at 28 cents a share, fully franked per annum, which is probably the best dividend yield in the market. But there are some doubts about how long the company can maintain that dividend. If it cuts it, the shares will fall further. My tip at the moment is actually you probably get out of Telstra fairly soon. In other companies, now Foster's has been pretty strong lately. Dad and I have spoken about that. There's every chance that Foster's could be taken over. There's rumours that a Chinese group called Bright Foods, which coincidentally is looking at buying CSR's sugar business, is also interested in all things Foster's wine business. Foster's would love to sell its wine business. If it doesn't, it's going to demerge or separate the brewing and wine businesses, and that's a good move for Foster's. And its shares are sort of getting back to the $6 level that they haven't seen for some time. Some people say the stock could be worth $7 to $7.50 in the event of a takeover, which I think has a greater than 50% chance of occurring. Speaking of demergers, I mentioned CSR. They're going to go down a dual path of either demerging, which is good, or selling off their sugar business, potentially to Bright Foods. Either would be good for shareholders. There's no reason to have a sugar business and a building products business lumped together in the same company. And on that subject, Dulux is doing the same thing, which is going to separate out its consumer paint business. It's of course part of Orica at the moment. Again, that could attract a takeover bid, as indeed Wattle Paints has done at the moment. So lots about takeovers and demergers in the market. And finally, the resources tax. I think two things are probably likely. Either the government does renegotiate it, which is good for the share prices of BHP and Rio, or the coalition wins the upcoming federal election, in which case the resources tax is scrapped altogether, and that would be unambiguously very good for those companies' share prices. Thank you very much.